In the currency quadrant, taking a look at the September Canadian dollar, which had a strong day during a week where the strength wasn't really there present the whole time. This was the largest one-day percentage move since June 24th. That's right, it was larger than the tightening day that we'll talk about in a minute. Today on the close, up a little bit more than 0.5%. That was about 76.70 and a half. On the lows, 76.11 half, down a little bit less than 0.25%. On the highs, 76.82. That was up about 0.7%. Again, largest one-day percentage move, even eclipsing the day that the Bank of Canada raised rates 100 basis points this past week. Now, the Canadian dollar is a commodity-based currency, and it correlates to crude oil. Subsequently, it's not a 100% correlation. It's also not a trading strategy, I should mention. But subsequently, when there's weakness in crude oil, you tend to see weakness in the Canadian dollar. That also applies for some of the industrial metals and Australia and some other areas. There's other commodity-based currencies like the Kiwi, the New Zealand dollar. But the oil strength that we saw today was part of the reason that we saw the Canadian dollar rebound from falling yesterday off of the previous day's move, which again wasn't that big. Now, Canada is in an inflation fight. Their inflation reached a 40-year high. It's not the U.S. alone that's dealing with this. And in May, it reached that 40-year high, 7.7% year over year, prompting that 100 basis point rate hike that I just mentioned by the Bank of Canada. Well, as you look out to next week, there is a set of Canadian inflation data, as well as more data coming out of Canada that's critically important, like their PMIs, like their retail sales, but especially that Canadian inflation data that's coming next week is going to be critical to watch as we have an up day on Friday for the Canadian dollar.